Support and resistance is probably the first thing you ever learn to draw on a chart. Supply and demand look similar, so a lot of traders assume they're the same thing. They're not, and the difference is practical, not academic. It decides how early you get into a trade and exactly where your stop belongs. Let's clear it up. Here's the core difference. Support and resistance is a single horizontal line, one exact price you expect to matter. Supply and demand is an area, a zone with a top and a bottom, drawn around where a move actually began. Why does that matter? Because price almost never respects a line to the exact tick. It overshoots, it undershoots. A zone gives price room to react anywhere inside the area, instead of forcing you to guess one perfect price. That difference pays off in two concrete ways. First, entry. With a zone, you can act at the near edge, the proximal line, which usually means getting in earlier and at a better price than waiting for a single line. Second, the stop. The zone hands you an obvious place for it, just beyond the far edge. With a bear line, you're always asking, did it hold? Or did it just wick through and stop me out? A zone answers that for you. Here's something that ties it together. You've seen old resistance become support after a breakout. Traders call it a flip or a roll reversal. What's actually happening is supply and demand. That level mattered because a strong move began there, leaving orders behind, which is exactly the definition of a zone. So the two aren't rivals. Supply and demand is just the more precise, more complete version of the same instinct. Prop challenge, or leveling up your own trading. Signal Deck tracks every trade in R with quant-level analytics. Prove your edge. Free. Link in the description. So which should you use? For actually entering trades and placing stops, zones win. They're more precise, and they give you the structure you need. Plain lines are still useful for a fast read of the chart, or for round numbers and obvious highs and lows everyone watches. In practice, most traders who use this method mark their zones for decisions and keep a few key lines for context. Zones lead, lines support. Quick recap. A support or resistance line is a single price. A supply or demand zone is the whole area a move came from. The zone gets you in earlier, gives you a cleaner stop, and even explains why old levels flip. Next episode is the hands-on one. Exactly how to draw a supply or demand zone on your own chart, step by step, without the usual mistakes. Subscribe and I'll see you there.